Hi, welcome to the Down Market View for Wednesday the 8th of October 2014. And starting off with the 5-minute chart, we can see yesterday pre-market prices rallied, then failed to hold, trading down to the 16,900 area here, and then breaking this convincingly and trading down to the 16,850 level before finding some buying coming into the market. So we've got a bit of support coming into the market at this area. We see the market starting to move higher. There's some news reaction here at 15.15, and that's a 50-bar range as well between the two grey shaded lines there as well. So you can see the market then finding support and moving higher until we have prices closing back above 15.35. Which is 16,900, and then we see this up thrust bar here where prices were thrust up, came back down on the lows, traded towards the low of the previous day, and there's a first clue as to the weakness that's in this market, because prices failed to close above the previous day's close once the day session started there. So there's a clue there that there's some weakness in the market, because if the market's going to reverse, it's traded down and then trading back to the upside, then you would expect to see the low taken out from the previous day, and we don't see this. So in the daily chart, let me just show you what I mean by this. We've got the previous day's low, the market traded above it in the pre-market session and then tried to trade back above it in the day session but failed to do so, and this is where you see this here. So there's the first clue that there is some weakness around in the market. Prices then trailed down some 70 odd points before again finding support at the support 2 pivot there, and then coming back above the 16,850 before trading up to the support 1 there, which has become a resistance, and that's 16,900 of course as well, just above it. So let's just move over. We see the market move lower following the potential sell signal. We see the market also having to deal with the psychological level there as well of 16,850. The market managing to see this as a resistance, and then we have this last push down to the 20-bar, to the 20-point scalp as the market stays below the 16,950 level. Prices then reverse and come back through, and then we go into sort of the early evening we don't know what to do syndrome, where we see the market's finding support. They're doing the damnedest here to hold the market above the 16,850, and you can see from the unqualified signals that the market was stuck in a sideways range. It didn't know whether to go up or to go down. So let me just clear things up a bit here. Let's just remove the unqualified signals and just show the ones that actually qualified. Let's just clean the chart up a bit. Let's get rid of this one here where there's 20-point profit there. We see the market rallying back, and then we say we have the support at 16,850. The market is trying to go up and then keeps coming back, and it took out the first one with a 24-point loss, and then the second one with a 16-point loss before we had this sell signal. And what I'm going to do is to switch, because I want to show you how this trade could have been managed based upon what was in the background. We've already had a successful short. We've had 2 failed longs. This is important. The very reason that we've had 2 failed long trades in the background indicates that we could see the market move strongly to the downside. So as I was watching this, I thought, well, if it's not going to go up, it's going to go down. And given the weakness in the background that we already have, we should be on for a decent move to the downside. So I'm going to show you how this was traded. So we joined the trade after the market's been filled, gone through the 16,850. We've taken out the support to the left, which is always a good start. and then we see the market going through the 20-point scalp there, and also the support one of the pivots, and then in the next bar the market moves sharply lower again down to the 16,800 level. The next bar we have a selling bar, and in this bar I've placed the stop 100% above, and the reason I'm doing this is because of the weakness in the background. The market didn't want to go up, and as I mentioned last week in the market view, if you've had a couple of losers, then there's a winning trade on the way that's going to be a decent move as well. So let's play the video and see what happened. The market continued sideways there for at least 30 minutes, and price is holding on the support there of 16,800. Now the market's made a new falling high there, or lower high, and I can actually start moving the stop from the top of the red bar, which was the previous one. Just before we move on, let me bring something else to your attention here as well. Notice that the market is making an attempt there to take out the previous bar's high. However, the market is failing to close above. There is low volume, so there is no buying around either to support this move. It's sitting on the psychological level until this bar now, where we're starting to see prices break through. We had a bit of buying coming into the market here, but again failing to respond to it. The next bar we see going through, and I drew this extension on there just so that I could see where there was some support. The market's tried to test, and I've moved the stop now 100% above this, which takes us to the 16,800. The market takes out the testing of the market convincingly with a professional selling bar there, so price is continuing to move lower. Just removed off the 0% extension there just so I can see that makes the chart a bit clearer, so I can see what the market's actually doing. I then get another falling low there, lower high, so I can move the stop. You'll see the stop being moved, and this time I've used 100%. I'm just going to wind this back just slightly here, just to explain what's the rationale behind doing what I did there. So let me just come to there. Now you have two choices here. What you can't see on this chart is that the market's traded down to the 16,750, the next psychological level to the downside. Have a look at the number of pips available at this time, and you've got 92 pips points on this trade. So at this point it's around 8:20 in the evening as well, at 20:25 to be precise, and it's decision time. It's a psychological level. We've broken this one. We've got about half an hour or so left of the trading session. Do you want the 92 pips or not? We're at a psychological level. The decision is yours. But if you want the market to let you or tell you what to do, then one other thing that I'm showing in this trade is that by using a 0% extension, the market's got to take out this high if it's going to move higher. And there you see the price is just touching it and going through there. So this would have taken you out naturally by allowing the market to tell you what to do. However, this is very important because, as you will have seen through the market view for the last few weeks, these psychological levels are very important to Dow traders. You see here at the 16,800 level how prices were held for 25 minutes to half an hour there before being broken and then moving down to the next one. So these points allow you, even if you came out of the market after the scalp at these levels, then you are going to increase the number of points. So if you have a psychological level that is just after the 20-point scalp, it's worth waiting to see if the market will attempt to actually trade to it. And this is exactly what we saw here and in this case it broke it and then went down to the next one as well, allowing you there the maximum of around about 92 points on this trade. We'll just bring that back. Yeah, it's about 92 on the trade there. So again, that's a way to handle this, but the reasoning behind this, just to recap, is that we had two fail signals. The market didn't respond to the upside following the buying coming into the market. We had the sell signal. We've got the weakness in the background. We've got the weakness in the bigger time frame, i.e. the daily chart. So there was a very good chance that this market would continue to the downside, which is precisely what it did there. So after the session ended, you can see the market did trade slightly lower and continue down to the next psychological level there, of course, of 16,700, and you can see the markets held there during the night and traded back up towards the 16,750, which is now finding resistance. These are very, very powerful psychological lines. Just go back through the chart and have a look and see how the market reacted at these levels. Right, let's move on and have a look at the daily chart. We can see the market yesterday trading all the way down to the 16,700 level. We see a bit of a bounce there at the moment. The low of Friday's test bar is crucial. A close below this is likely to see the market move lower, so we'll just draw that in there at the moment. And let's see if there's any news to move the market back to the upside. Today we've got the FOMC minutes at 7 p.m. and that's the only high impact news item today, so stay out of the market at 7 p.m. this evening, because this is a very high impact news item, and how the market will react. It's likely that the market will probably be given some positive news to try and move it back to the upside there, but it won't last too long, because as we've seen already from on Friday, we saw the market moving higher on the non-farm payrolls, and Monday and Tuesday the market coming back to where the testing took place on Thursday, not Friday, as I just said a few moments ago. Right, a quick look at the implied volatility. There's a problem with their site this morning. They haven't got the figures for some unknown reason. They're not being displayed. However, just a quick look, you can see we're heading towards the 14% area there. We've not seen a doubling of the implied volatility yet, so this market is still to the short side in the daily chart. And again, just refreshing there, and the figures are not turning up, so there's obviously something wrong with the site there, but we're heading towards the 14% there. Right, well, that's it from me today. All things being equal, see you in tomorrow's market view. As ever, thank you for your support and also for watching. See you in the next one.